Hello, my name is Sasha D'Souza, and I'm the Senior Vice President of Talent Initiatives at Toronto Finance International, or TFI. For those of you who may not be familiar with us, TFI is a public-private partnership between Canada's largest financial institutions and the government, working together on initiatives which drive the growth and competitiveness of the financial services sector, and we're the lead voice for the promotion of the Toronto Financial Centre around the world. Welcome to the latest edition of TFI Talent Talks, a webinar series that promotes discussion, learning, and the sharing of emerging best practices in talent management and workforce strategies in financial services. In today's session, we explore the talent and skills that we need to support and accelerate the growth of sustainable finance in Canada. And I have the pleasure of introducing the impressive panel and moderator for this discussion. So I'll begin with Sara Alvarado, Executive Director at the Institute for Sustainable Finance, or ISF, which is hosted by the Smith School of Business at Queen's University and brings together academia, the private sector, and government to shape Canada's innovations in sustainable finance. Prior to joining the ISF in April 2021, Sara was the head of risk and chief anti-money laundering officer at the Canadian Infrastructure Bank in Toronto. Prior to joining the CIB, she worked as Senior Officer, Infrastructure, New Products, and Special Transactions at the European Investment Bank based in Luxembourg, with a focus on catalyzing private sector investments into green infrastructure in policy priority sectors with support from the EU. Before moving to the EU, Sara spent 25 years in the investment industry in Canada. She is currently co-chair at the World Economic Forum's Infrastructure 4.0 initiative and is mentor at the Infra Challenge Innovation Competition organized by the Global Infrastructure Hub, a G20 initiative. Our second panelist is Norie Campbell, who is Group Head and General Counsel at TD Bank Group. Norie leads the Economics and Environmental, Social, and Governance team, and she's also accountable for compliance, legal, anti-money laundering, fraud risk management, global security and investigations, marketing, and corporate and public affairs. She joined the bank in 2000 and was named to the bank's senior executive team in 2013. Norie is the chair of TD's ESG Senior Executive Team Forum and is the executive champion for the ESG strategy across the enterprise. Our third panelist is Lindsay Patrick, who is the managing director and head of strategic initiatives and ESG at RBC Capital Markets. Lindsay leads the Sustainable Finance Group and with her team spearheads the provision of solutions and advice for RBC's institutional and corporate clients across all areas of sustainable finance that incorporates both environmental and social perspectives. Lindsay is also responsible for the advancement of the RBC Capital Markets business strategy, supporting the firm's overall growth and performance ambitions. Lindsay has 2 decades of experience in investment banking, spanning trading floors across North America, Europe, Australia, and Asia. Upon her return to Toronto, she rejoined RBC Capital Markets as the global ETF strategist before launching the Sustainable Finance Group. And finally, our own Jennifer Reynolds, President and CEO of TFI, will be moderating our panel today. Jennifer's 20-year career in the financial services industry has included senior roles in investment banking, venture capital, and global risk management. On behalf of TFI and our members, Jennifer has been active in the sustainable finance field, both internationally and here in Canada. She is the co-chair of the UN-convened Financial Centers for Sustainability, or FCF4S, network, and serves on the Advisory Council for the Institute of Sustainable Finance. Jennifer is also active on the CSA Group Committee, a Canadian standards development organization currently developing national guidelines for transition finance. Welcome, Sara, Norie, and Lindsay, and thank you for joining us. And Jennifer, I'll turn it over to you to get the conversation started.
That's great. Thank you so much, Sasha, and welcome to our fantastic panelists. I know this is going to be a great discussion here today, and welcome to everyone in the audience for joining us here today. So The discussion today is around obviously talent and sustainable finance, and the momentum in Canada around sustainable finance is really been tremendous over the last, I would say, 18 months to 24 months. We've seen a lot of activity from the banks, from the pension funds, the insurance industry, and that momentum is really fast following, I would say, what we saw in the EU. Which is great. And it's being driven in a large way by the private sector, which is a little bit unique relative to other jurisdictions. So we've seen a lot of capital dedicated, announcements around capital that the banks are going to dedicate to sustainable finance, to transition in our economy, which is very important. We've seen announcements from our pension funds around making sure that they're holding in their portfolio companies that are thinking about transition responsibly. And we've certainly seen ESG investing just go through the roof over the last 18 months or so. So all very interesting trends. And, you know, as Sasha mentioned, I have the opportunity to see what's going on through my role with FC for Us in other jurisdictions around sustainable finance. And one of the interesting studies that I saw recently was around talent. And does the EU have the talent pool that they need to increase that growth in sustainable finance? And the study found that actually only about 15% felt that they had that sustainable finance talent integrated into their teams at this point. And over half of them were having trouble recruiting. They felt that the demand for these types of roles exceeded the supply. So I thought, you know, in that context, we should be thinking about that here in Canada because we are moving so quickly. And that talent piece is absolutely critical. So that's sort of, you know, how the foundation of this discussion started. And fortunately, we've got some great speakers here today to start us off. Now, I know in the audience today, we don't, some people might have varying levels of understanding education around sustainable finance. So I thought we do a little context setting for the audience to begin with. So Sarah, I was going to start with you, just to give us a bit of perspective on what are the trends globally, what's happening, what are the key things that people need to be thinking about around sustainable finance. And I think you have a slide to share that you're going to speak from as well here.
Thank you. And thank you, Sasha, for the kind introduction, and Jennifer for the invitation for us to be here. This is a very topical panel discussion. When I think about international trends, I think about phases. Commitment to Paris Agreement, disclosure, setting reduction targets, execution strategies, performance tracking, and not all of them are moving necessarily sequentially, but happening in parallel depending on the jurisdiction. So before I move to the three trends that I thought I'd mention to you, I wanted to provide a tiny bit of context very quickly. So on the slide, what I did was I brought that National Geographic map of Europe, where you see the maroon lines are the oil pipelines, the green lines are the gas pipelines. And then I'm going to take you back on a separate note to 1973, at the time of the oil embargo on the US, the Netherlands, South Africa, and other countries. These economies did suffer a lot at the time. The embargo was lifted the following year from the US, but it remained a little longer in the Netherlands. So no surprisingly, you see the picture on the right-hand side with that train station and a sea of bicycles. And anyone who has tried to drive in Amsterdam, you know that it is an impossibility. That culture has taken over the years. A second point in time that is unrelated, but it links to the history, is when the Eastern European countries joined the EU, and therefore now they're following EU consolidated energy policies. So you can see countries that were part of the Eastern Bloc that are now part of the EU, including Poland, Romania, Czech Republic, Latvia, Estonia, and the ones in the map. So I wanted to bring that because as I talk about the three trends, that picture will resonate. So the first clear trend that I see globally is move to action, and very rapidly, by the way, including Canada. That has accelerated due to COVID and the economic recovery strategies, which are aligned with sustainability, and also importantly, given the US Biden administration rejoining of the Paris Agreement. So the clear move to action is there, and renewed momentum in Canada. The second trend that I'm going to briefly touch on is the focus on, pardon me, increased disclosures and the need for data. And data needs to be timely, standardized, comparable, and third-party verified. We are at different stages, as I mentioned before, in terms of disclosure. For Canada, for example, I'll make reference to our TSX report published about 3 weeks ago. It is on our website if you want to check it out. But it shows that we in Canada are doing better than Japan, are around par with the EU, but with the US, but are very behind the UK and the EU with respect to reporting and setting targets. The UK has mandatory disclosures already. The EU has the SFDR. The CFA Institute is currently working on global voluntary product disclosure standards. I'm part of the Canadian working group consultation on that. So I'm following very closely on this increased disclosure trend. And lastly, the third trend that I see and is very important is the focus on value chains. As economies globally look at redefining energy, transport, and other industry sectors like cement and steel, the focus on value chains has become top priority. And if we use the example of moving from combustion engines to electric vehicles, you can think about a value chain of oil extraction, pipelines, refineries, distribution, gas stations, your car, to something that looks for electric vehicles like an electricity system. So hydro, wind, solar, hydrogen, to transmission lines, distribution, home, your car. So same car, same driver, but fundamentally different ecosystems in terms of the value chains and importantly, the investment opportunities that come with that. So you can think about solar panels on the roof of your home feeding your car battery. And then new technologies like carbon capture and sequestration to enable, let me emphasize the transition to net zero, because it's not going to be a switch, it's going to be a transition and it's going to take time. So thank you for that question. I think the trends are very relevant.
Thanks, Sarah. That's really helpful and a good point, because it is a transition. It will take time and people are impatient sometimes and want to see everything change on a dime, and it won't happen that way. We've got to work really hard over a long period of time. So maybe, Norie, I'll go to you next to give us some of your perspectives on what are you seeing, in the business world? How are companies incorporating sustainable finance into their strategies and into their day-to-day business?
Well, thanks, Jennifer, and what a great setup by Sarah. So maybe just to your point, to focus in on what are issuers doing and in our circumstance, bank. I think if we look back, we'd say there was a time, and actually maybe not even that long ago, where ESG was really focused on your corporate philanthropy or your social impact work, and clearly that's very important work. But the way we're thinking about ESG now, it's no longer something we do. It's really slowly becoming how we do everything. And so I think the key word in there is really embedding. That's the big change that's going on across organizations. And in many ways, this is a step on a long journey that for us at TD Bank we've been on. We were the first carbon neutral bank in North America. We've always thought that we must measure customer satisfaction. We must think about what we're doing with our employees and how we treat them. So there's so many important topics under the ESG banner, but this big change that's going on, the way I describe it, I'm a believer in food analogies. And so my food analogy for this is that ESG is moving from icing to cake. And we need to bake ESG in across our whole organization. It must be a part of how we think about risk management, how we think about our product development, really a part of all of how we do business and that everything that we do. And I think it maybe to also go with a set of threes, I'd say it really comes in three key areas. Planning. So, we really need to be picturing the bank 2 years out, 5 years out, 10 years out, 30 years out, figuring out where we want the bank to be in a very changing world and what's our compelling vision to get there. So to your point, thinking about the strategy of the TD Bank, how does the ESG feed into it? The second, and what we're obviously here to talk about today, is people. And when you think about banking, what our CEO always says is, we are in the people business. We don't make cars, we don't make computers, we make relationships with our customers and meet their financial needs. And so in every circumstance, what we're going to achieve as an organization is dependent upon our people, the people that we're able to attract. And so just two quick things to say about that. One is about adapting. You know, we need to adapt to the environment. That involves changing behaviors, how people are thinking, how our clients are thinking, really also. How can we help on that front? And so hopefully we'll get a chance to talk a little bit about engaging employees, which I think is really, really important to change at this scale. And then it's having the right talent. And that's exciting on two fronts. One, this is a massive development opportunity for people who have been in banking. Also something hopefully we'll get a chance to talk about too. But then this is a very new space. And what I love about a new space is this isn't a spot where people have years and years of experience to offer. Some do, but not a ton. You know, so like in tech or in digital, this is an amazing opportunity for talent who are starting out in their careers, you know, who, you know, want to make a huge contribution, can quickly make a huge contribution. And to me, that makes a lot of sense. If you say this is a very future-oriented thing, the fact that those who will be our future leaders are at the middle of ESG, I think is really exciting. And then the third, and then I will turn it back to you, is accountability. And we heard this, and what Sara was saying too, this is an area of really needing to measure, really needing to show accountability. And this also becomes a people issue. And the way I see that is that this year we made a big step forward by adding ESG into how our senior executive team is measured by our board for compensation purposes. And so that wasn't new either. We had metrics like customer satisfaction, things like that have been part of how we pay people at the bank for decades, but more ESG metrics, more to look at. So I guess when I sum it all up, I really have to applaud you and Sasha for thinking this topic of talent right at the center of how we will achieve our ESG aspirations for Canada. I think it's very smart, and I'm really excited to hear from our other panelists this afternoon.
Yeah, it's a very, very important topic, and we'll dive right into the talent discussion. But before that, Lindsay, I just wanted to give you the opportunity to tell our audience a little bit about, you know, what are the key trends in your mind that are driving sustainable investing right now?
Yeah, thanks, Jennifer, and you know, really appreciate TFI for hosting this discussion here today. And I'm delighted to be joined along Sara and Norie and you, Jennifer, on a really interesting topic. So, you know, couldn't be more topical. Also, my Bloomberg ESG Daily, the headline yesterday was ESG ETFs have seen 52 weeks of straight inflows on a weekly basis into ESG-oriented funds. That's $112 billion into ESG ETFs over the course of the last 12 months and $60 billion since the start of 2021. So this is a theme that is clearly resonating with the end investor across all segments of the market. So the flows are really strong, and when the flows are really strong, you get the whole ecosystem of investing, new product development, increased intention coming forward. So I think that's one aspect, is the flows are relentlessly strong, and this shows that this is not something that's going to go up and down on a weekly basis based on cyclicality in the markets, whether we're going through a quality phase or a value phase. You know, this is something that is seeing persistency today. I think the other theme we're seeing in sustainable investing in particular is much more activity from asset managers and asset owners in engaging with their investee companies on ESG issues. And that's regardless if you're an active manager or a passive manager. Your view is your view as an investor in terms of helping align your own business model and the economy to net zero is about working with your investee companies to do that. And so we've seen much more engagement, much more shareholder activism around ESG issues. And that too is a trend that I would say is persistent and likely here to stay. And then the last trend is really companies. Although sustainable investing really arose from investor demand, seeing ESG risks primarily as systemic to their own investment thesis, companies have really responded saying, I'm running my business differently. I'm embedding, as Norie said, or integrating ESG into my strategy. And I'm showing my shareholders and my institutional investors how I'm doing that. And increasingly, that's through sustainable finance products and solutions. So the biggest trend we see from the capital markets perspective is integrating sustainability performance targets into sustainable structures themselves, financial structures themselves, be that sustainability linked loans, sustainable bonds, use of proceeds, green bonds, social bonds. So that's giving investors a wide variety of product solutions and investments to choose from. And it's really all these things combined that are driving a much bigger ecosystem, which will, we think, ensure that sustainable investing stays top of mind going forward.
Thanks, Lindsay. And thanks to everyone. I think for those on the line who aren't as familiar with what's happening in the world of sustainable finance, that sets the stage well for this talent discussion. Because clearly, we've got a whole bunch of new roles right now, or existing roles that are transitioning into different types of roles. So I wanted to start with you, Norie, maybe to take us through some of your observations on resource and considerations now. How are the roles, the existing roles, changing to adapt to what we need, to these skills of the future? How are you recruiting new people to TD differently? Can you provide a little bit of a perspective on that?
Yes, I can. I think it's maybe just in a couple chunks. So I think to the point you're making, and maybe this broader concept of embedding, many people at the bank need to know more about ESG. And so there's a whole exercise needs to go on here about really engaging our colleagues and understanding what we're trying to do, how it changes what they do on a day-to-day basis, and why it's really exciting. And so I'd say sort of not everyone needs to be an expert, but now every TD banker needs to be an ESG banker. And how do we make that transition of our 90,000 workforce? So I think there's two just examples I'd give here to illustrate. And so one is we have a Brightmate online learning platform at the bank called TD Thrive. And so we've created pathways within TD Thrive for learners. And it's just actually going to roll out this month. And basically, there's some shared things. A bit of what we've just been doing, like ESG Unpacked. What do you need to know to understand this new space? Then a pathway of like, what are we doing at TD? How are we responding? And then each business line can have their own business line specific pathway for their employees. And, the good thing is, as you'll well know, people are learning in many, many different ways. And so this is a very adaptive tool for folks who want a podcast, or you want a burst, or, really can flex with the way that people want to learn. Another neat one, and actually it's going on right now, so it's very exciting for me, is we're doing a Tech Jam. Our Tech Jam 2021 is the Environmental Footprint Challenge. This is like a 10-day virtual event. We have 125 colleagues across the bank that are trying to find innovative solutions to the question, how can we help our customers and our colleagues reduce their environmental footprint? So that's like a hackathon, but you don't need technical or development skills. You're really problem solving. So I'm going to be one of the judges on Friday, and we'll see these ideas that our colleagues will bring forward. And the reason these are so important is we know if you can awaken the interest, the vision, the passion of your colleagues across the organization, that's when great things happen. That's the really exciting opportunity, and that's when it really does become embedded. So that's sort of at the broadest level of how do you start to transform behavior, or at least how we're tackling it. But then I think it also, in your question, is some very particular expertise that's needed. And so maybe just to give a little bit of context, how are we organizing that? So you could take a path that says, well, look, we need to pull into the center everything ESG related, so that but our path, what we chose to do is a center of expertise that operates like a hub and spoke. So rather than thinking everyone who knows about measurement or everyone who knows about research are coming into the center, they're working in teams. And I think the value of that is, of course, we have different businesses. We have a diversified business model. We're in different geographies. People have different expertise. But you really do need the learnings. You need the shared vision. I heard a funny expression I've taken in for us now, if TD only knew what TD knew, And ESG is one of those topics. Like, there's so much knowledge and information and activity across the bank. It's like trying to get a hold of it and really leverage the learnings. From a background perspective, we're seeing new skill sets. So not surprisingly, of course, we have our people who've always worked in social impact, very important, but project managers, engineers, accountants, communicators, economists, we need them all really to get this right. I thought I'd just end on an example maybe, which is a secondment program we've been running in the bank. So we brought a banker in from our commercial bank, our business bank, into the ESG team. And that's a really neat opportunity for the ESG team members to bring their expertise to the table, the banker to bring her expertise to the table, and then they can work on things like policy, measurement, like KPIs, and how will we move forward. And so that was such a success. We're now doing that with some other businesses, and it's a great way to fuel, you know, that both building what needs to be built, but also, you know, embedding across the bank.
Yeah, I think, you know, I'm observing that too in different organizations, how, you know, the pool of talent, you know, used to be in this silo in terms of ESG talent, and now it's starting to permeate throughout the organizations. And I think that's a really exciting time, is, you know, how do you accelerate that? How do you make that happen as quickly and effectively as possible? And Lindsay, I'd love to get your perspectives too, because I know that's certainly happening at RBC as well.
Yeah, thank you, Jennifer. Maybe I'll speak more specifically in terms of how we're looking at it from capital markets and what we're looking to do. So it's very clear to us that new roles are emerging, and that our clients want dedicated ESG thought leadership, expertise, and insights in partnership with the current suite of expertise and advice they get from their coverage officer to help them make better investment decisions. And so, you know, one of the key skills, and we'll get to, that we were talking about, and one of the key, I think, success points for people working in sustainable finance is collaboration. So how can you work with your existing team members to bring those solutions and that advice specifically into your clients? In terms of what roles have evolved, you know, our sustainable finance group has tripled over the course of the 2.5 years since we've started. And what we found very successful is that regionally, and I think Sara covered this off, jurisdictions are at very different parts of their journey, and transition pathways differ depending on if you're in Europe, if you're in the US, and even quite frankly, across provinces in Canada. Quebec's transition to a net zero economy is going to follow a very different pathway than what British Columbia or Alberta is going to need to do. And so similarly, we have found that making sure that we have resources on the ground in all the different regions is really important to us, to work and to embed those relationships within our business. I would say last, you know, I wouldn't underestimate in terms of roles and responsibilities the importance of data analytics and measurement overall. So that's one of the biggest areas of growth for us as a bank. And my team works very closely with our group risk management team, who are looking at climate risk as well as a broader array of environmental and social risks, to make sure that that's being embedded into the perspectives and advice we share with our clients. And that's a differentiating factor, because, you know, your clients always want to know what their bank is thinking about the macroeconomic landscape, the industry landscape, the drivers, etc. But this is, again, a different lens that we can bring with the capabilities that we're building that can really help them understand the capital decisions they need to make, the pathways they need to take on, and perhaps the partnerships, and even getting into, you know, mergers and acquisitions and strategic alternatives they need to consider as a result of integrating ESG into their corporate strategy.
Yeah, I think, having come from a capital markets background myself and spent a couple of decades working there, it's really interesting now to see how quickly things are moving there, and, you know, different people I've known throughout my career moving into that area quickly. So it's exciting. So I wanted to turn it over to Sara next with a question, but before I do, I just wanted to note for the audience that we'd love to take some questions, and I'm going to save some time at the end. So please do put those into the Q&A, and we will get to them at the end of the session. So Sara, I'll turn to you. I wanted to get your perspectives on what skill sets do you think organizations need to really drive their sustainable finance agenda?
Thank you. And, I take the integration or the embedding from Norie and Lindsay. I mean, that's super key, being integrated. When I look at the critical skills, I tend to divide the sustainable finance market into two, the providers of capital and the users of capital. And then, us meeting somewhere where sustainable finance will be just finance. So from the providers of capital, I think about it in the context of our own organizational chart, where you have a unique set of skills at the governance level, at the board level. They need specific skills. They would be focusing on governance and fiduciary duty. But again, they're going to be looking at the overall business. When you come down to the executive level, then the focus on strategy. Where do we go, right? What do we need to be to achieve net zero by the goal time? And then when you come down to senior management, the focus on execution. And I couldn't agree more with Norie and Lindsay, because it needs to be integrated. And then I'm thinking frontline investing or lending, risk adjudication, accounting, legal, compliance. There's no point in bringing some up the front row but leaving the other ones behind, because you don't have that synchrony that you need to be successful. So their points are very key. In terms of the users of capital, their skills are going to be more on the technical side. You think about new materials, new processes, carbon capture sequestration, but nonetheless, they have to be very mindful of what clients are requiring, right? When you're looking at investing on the fund side or lending or banking, there has to be that match. So providers of capital and users of capital need to be mindful of each other in the context of sustainability. So back to you, Jennifer.
Thanks, Sarah. So I wanted to move next to and get all of your perspectives on this, but where do you see those really critical gaps right now? Is there anything in particular that you're seeing? Maybe Lindsay, I'll start with you. Anything really critical that you see is, that heightened awareness that we should be thinking about?
So certainly there are technical skills involved when structuring a sustainable bond and a green loan or a sustainability linked structure with your clients. And you need to be conversant in all the best practices around a sustainable finance issuance, the green bond principles, the sustainability linked loan principles, etc. But equally, because, and certainly for the emergence of the link structures that are involved around setting ambitious and meaningful targets, you need to be able to put those in context and put those in context of what a broader commitment to the Paris Agreement or a net zero emissions future looks like, or broader context of, what is sort of acceptable from a market point of view in terms of being not just business as usual, accelerating meaningful ambition from an ESG perspective. And so that requires some technical expertise. It requires some experience in just going through and reading. My team reads all of our client sustainability reports all day long, working very closely with the data providers, the second party opinion providers that facilitate that issuance. That's probably where the biggest backlog is right now, is around those second party opinion providers. And in fact, many of the financial institutions are recruiting talent because they've got that technical expertise from those areas to embed them within our organization. And then equally on, when we look at risk management, that technical expertise around measuring emissions, understanding the difference between scope 1, scope 2, and then trying to put scope 3 into context, which is, a very difficult to do. That's probably where the biggest gaps are right now. And that it's a bit of a change of thinking in terms of, what traditional investment bankers do.
Thanks, Lindsay. Norie, we'd love to get your perspectives too on those gaps.
I'm going to agree with a lot of what Lindsay said, but I'll just say it my own way, which is, so there's obviously, and you mentioned this, Jennifer, in your beginning, a huge and very fast transformation taking place. And so, of course, we're working to catch up from a talent perspective, because the need for talent is really growing very exponentially. And so I think if we were to ask ourselves and get the honest answer, do we have the skills that we need, we'd have to say yes and no. So I think there are some very deep technical expertise that is needed, like the amount of knowledge and very deep verticals you can have on climate related pieces that, until the last few years have just not really been as much a focus within banking and are clearly really needed. So there's no doubt there's skills that we need and that we need to bring into financial services and teach them about financial services, which is the other side of it. But I have to confess, I am a very big believer in the ability of people to learn and grow and stretch and to take transferable skills. And I've been a huge beneficiary of people believing that in my own career development. I think when you're faced with this sort of a change happening at this exponential level, you actually have the choice taken away from you, whether you want to believe it or not. We really need to be able to develop people into the skill sets we're going to need for the future. And I think we've seen that for years across banking. We saw that in technology. We've seen that in digital. We've seen other areas that, one near and dear to my heart, and it sounds like also Sarah's is AML. There's another area that just exponentially grew in a very short period of time, and you needed more experts. And so we think we are a development machine, a major bank. I can speak only really to TD, but I know we're not alone in this. Pre-pandemic, I got up in front of all of our leaders and I shared a stat that in the past year, 20,000 people at TD had received a new opportunity within TD. It's like a proven development machine of being able to take people's dreams and aspirations of what they want to do with their career and bring it to life. And so you really need that development machine to get ready for what is coming. And in many ways, just to make the same point that Lindsay made, you're taking what they do know, our culture, our businesses, the products, our clients, our risk appetite, and then you're teaching them or they're learning themselves, the things that we need to know about ESG. So I guess the thing that I just come back to is that the really neat part about ESG is the aspiration that's built into it, which is wonderful for both your long-term colleagues and new to bank.
Yeah, it's interesting. We've had this discussion, Norie, on other fronts, just skills of the future in the past. And, the idea that you can't just go out and hire those skills of the future. All your young people have them, but the existing employees won't have them. So whether it's ESG or otherwise, we have to be constantly evolving and changing in our workforce. And so brings me to my next question, actually. Lindsay, maybe go to you with this one. As you think about those talent gaps, what are you seeing at RBC? Is it depth of talent, like going deep in a real technical area, or is it breadth is more important? Maybe a bit of both. What's your thought on that?
A bit of both, and maybe I'll tell you a little bit about how I've been able to put together my team. And it's one of the great benefits, in a new area that is growing so quickly, is you can bring together the skill sets when you're creating this for the first time and really create a high-performing team. So what we've done is we've built breadth across the team, but brought in people with very different perspectives and backgrounds and skill sets. So we have, colleagues that have deep corporate sustainability consulting experience. So they may not have banking experience, but they have that client-facing, fast-paced, deliver solutions and advice into our clients. We've brought in people from our RBC's corporate sustainability team that can share some of the best practices and what we've learned as a bank, and then again, share them into our clients. We've brought in people that have policy background, thought leadership, a lot of writing, analysis capabilities, someone from our strategy team, for example, and then, teammates that have worked in the world of impact investing in the venture world. So I think you need that depth of expertise because those technical skills are so really important to create credibility in the market and to ensure that you're providing that best advice into your clients. But if you can build a broad team that can take some of these areas and together, that's where I think we've been, successful in building that solution together. And then you get some of those ecosystem effects of people working and sharing their knowledge together, and you create a really dynamic, exciting place. We too have worked on secondments. So we've done 2 very successful secondments with our investment banking team. So we're seeing a lot of engagement from our junior employees that want to work with the team, and we're creating a variety of different project work. And in addition to the broader Sustainability Advisory Council that we have set up, initiating a junior sustainable finance advisory council, just to keep, building in that expertise as deep into the organization as we can.
Thanks, Lindsay. And, there's a question that's just come up here in the chat, so I think I'll just hop to it because it's sort of timely given the discussion we've just been having. And Sara, I'll turn to you because I think in your seat, you're well placed to answer this one. People are looking for what is the schooling, the training, what should they be thinking about on that front, whether they're in their career today or younger and starting off their career?
Thanks, and that's key question. Let me go back to the key drivers of economic development, and we have human capital, i.e., talent, financial capital, and then productivity, technological developments. I'd like to thank you and your team for bringing this panel because it addresses the first one, and I find we have spent a lot of time looking at capital flows and productivity and technology, but not so much so on the talent side. Urgency has never been so relevant than today when it comes to education. And a coordinated effort then across the education system will be a competitive advantage. So when you think about math as an example, we take it in school, then in high school, then in universities, and then you get to the workforce, right? And you use it. We need to take the same approach to sustainability such that careers like, I can think about, I have an infra background, right? Engineering, architecture, project management. You look at finance, agriculture, legal, they would have a base coming from high schools, similar to math, that then they can build upon at the university level, and then you hit the workforce, and then you learn from the pros for doing it, right? And I believe there has to be a coordinated effort in the educational system so people don't hit university with those gaps or the workforce with those gaps. So to wrap up, I have come up with a motto of learn, relearn, and unlearn at all levels. So when I talk about learn, is us learning climate change, sustainability, biodiversity, and the science supporting it, so we have that good base. Relearn some of the concepts as they evolve to include sustainability. For example, in the project finance world, you create an SPV, you have to take into account tax considerations. Why would it not be taken into account sustainability at that point as part of an integrated analysis? And then my last point is unlearn some of the ways that we used to do things that are not going to work for us going forward, and the need of some adaptation. For example, cost-benefit analysis, where we had given it a little bit more of a weight to the financial aspects, net present value, quantitative factors, so you can come up with a go, no go. And I think we need to start incorporating more of the externalities and the benefits of environment to society and all the sustainability factors.
Norie, another question's come up here, and I thought maybe I'd go to you with this one. Do you think that your organization can we train as an industry? Can TD, can other institutions train quickly or retrain their workforce quickly enough to keep pace with what we need to do?
I like that question because what I find is when people are learning in the workforce in particular, we have come with the challenge of not being able to read a book anymore. I think that's pretty much consensus, let alone a 50-page report. And there's, a lot of information out there. We are bombarded. So what we're trying to do at the ISF, if we're trying to present, like you can see our primers, is a brief on what's taxonomy. So if you don't know that, read it there, don't get embarrassed. If you want something more in-depth, then we have a course that was launched 2 weeks ago that goes into a lot more of the details. And we're working on one for September for people that can get into classroom, maybe, 4 days a week sporadically, that you can take 2-3 hours from work and then go through a process. right? So you don't end up with all these gaps and all these webinars that will give you pieces of the puzzle, but you kind of need a little bit of a story to build from there. I find that there's tons of information out there, and having something a little bit more concise could help you figure, okay, I'm a risk manager, I need to read this, or I'm doing financial modeling, this is where I need to go on and delve deep into my learning. But there's a lot of continuing education need, because we cannot afford to go back to university for 4 years.
No, exactly. Norie, maybe I'll get your perspectives on that as well. In terms of keeping pace with, that education of your workforce, and also maybe how much are you developing yourself within your organization versus going to outside organizations? And, in some cases you don't want to reinvent the wheel. In some cases you want to do it yourself, probably.
Yes, that's a super question. So maybe just 3 thoughts. So this is a learner's portfolio. Really to the points being made. It's a very broad set of topics, and it's very interesting. It's hugely dynamic. So even I just find myself, I've been my own teams within TD Securities have been charged with some of my education. I'm never making it out of 101. It's like hydrogen 101, then I do carbon capture, use and storage 101. So I think that you're right to say there's a lot to learn. I guess the thing that gives me a lot of confidence about our ability to adapt to do it, first of all, it's a very compelling topic. People want to be involved in ESG, so that really helps. But just to go back to one of the points we talked about, like there's been lots of times in my 20 years at the bank, and certainly before that, where we've had to ingest a very big new mandate into the bank, whether that's, if you go back in history, like Sarbanes-Oxley, or you take new capital rules, CCAR in the U.S. bank. There's just been, I guess, a very proven path of being able to take and where you need it, you supplement with external, you supplement maybe with advisors, to the point that you're making, Jennifer. And a lot of times it's not uniquely or idiosyncratically at our bank. It's happening everywhere. So it's not like you can pull from other places. You really need to figure out how to do it yourself. And so all of that gives me a lot of confidence, and I think it has the tailwind of being exciting and compelling. And of course, the ESG thing gets a little bit skewed towards the E, but embedded in the S for banking are a lot of topics that we have a very deep history of work in. Diversity and inclusion is a big passion of mine, as I know you know. And then if you think about financial inclusion and financial literacy, how we think about our colleagues, reskilling, future of work, all of these pieces. So I think under the umbrella of things that we're looking at in ESG, there's some parts where we can tap into quite a lot of knowledge. And then the final thing I think is like the G element of ESG is also sometimes forgotten, and yet the ability to mobilize for bank-wide initiatives is a strength of banking, and so that will help us through this ESG journey, because we know how to establish controls across the organization, run policy through the organization, all those things that are going to be really critical to being successful here.
I'm glad you went there, Norie, because I did want to get into this idea of, the elevated importance, I think, of the S through the pandemic, and how, we were very focused on the E, but I think the S now is really, in terms of the agenda, come right up. So maybe, Lindsay, I'd love to get your thoughts on that, from the perspective of, just the path on the E versus the S at RBC, and are there, different talent problems for each of those areas?
Yeah, good question. And they're both systemic issues, right? And so in many ways, although the problems that we're solving for are very, very different, the approach to solving the problem can be very similar in terms of what you need to do to get into some of those answers. And for me, that's why I really view the E and the S as interlinked and impossible to separate because they affect each other. Some of the decisions we're going to make on climate are going to have socioeconomic considerations, and equally, some of the things that we need to do to ensure that we're balancing for a more equal and accessible economy are going to have environmental considerations. So we like to think of ESG as a three-legged stool, and that in an ideal world they are balanced. And increasingly, that's how our clients are seeing it. So, for example, within the sustainability linked loan structure that we're working on, best practice now that we're seeing with clients who want to develop internal KPIs, so internal sustainability targets themselves, is they're looking to address an E, an S, and a G target to really fully communicate their broader ESG strategy into the loan structure, not to only look at one pillar versus another, because their strategy is holistic in nature and these things are interlinked. And I think that has been one of the bright lights coming out of the pandemic, is the fact that there is broader appreciation for all these bigger systems issues and the fact that we all have responsibility to address them together. I might go back, Jennifer, if I may, just a little bit on your question in terms about the learning ecosystem, because from our experience, one of the best learning ecosystems is learning from your clients and recognizing that our clients are on this journey with us, whether it be within the retail bank or the commercial bank or where I sit in capital markets. And the best way to build that expertise is to roll up your sleeves, work with your clients on a deal, get it over the finish line. And then the next thing we know, that the banker that we worked with on that deal is now your best point person to leverage that expertise across a whole slew of other clients. So, don't underestimate the impact of actually learning from our clients, because we're all in this situation together.
Yeah, that's a great point. And, it makes me think, the importance that the financial sector has in terms of this permeating, not just in our large corporations, having progress on some of these sustainability issues, but, we're an economy of small, medium-sized businesses. So then through our commercial banks, hopefully we're going to start to have an impact there as well, and work closely together with our large organizations and our small and medium-sized businesses that the sector is serving too. But to go back to talent, Norie, I wanted to ask you, because we talked a bit about this on the pre-call actually, do you view it can be a bit of I think, a competitive differentiator, having this focus and being a leader in this area in sustainable finance and ESG generally. So could I get your thoughts on that and how you're thinking about it?
Well, I think it definitely is. It already is, and it's going to be more. I think so many, maybe everyone, wants to do work that matters, and so we've worked really hard on being more explicit about our purpose as an organization, as I know many have, to enrich the lives of our customers, our colleagues, and our communities. And of course, ESG is a very major part of delivering that purpose. So I think being able to show your workforce that you have and the workforce that you want to attract, what you stand for, is really, really significant. And I would just add to that we do actually measure how people are feeling about the bank's progress on these fronts. So, and we have a what we call Pulse. It's our annual survey on colleague satisfaction. And in that survey, we ask them, is TD doing the right things in the community? How are we doing on the environment? So we can stay in touch with what our colleagues are expecting us to do, and I think that's important too, because sometimes you don't know how much what you're doing is resonating, and whether you're hitting the right mark with your colleagues. And we worked really hard in a volunteer network so that people could use sort of the platform of the bank to find places where they could get things that they want to do outside the bank, which we know is really, really important. The only other thing I just wanted to mention on workforce is a little bit embedded in what Lindsay was saying, is we obviously have our experience in financial services, which is a lot about opportunity. But we do have to really think about what's going on in the Canadian economy as we try to make this transition, and how can we aid a responsible transition for a resource-rich economy, which of course we are in Canada. And so we're also trying to use our expertise to add to that dialogue. So I have the economics team, a great team within my group, and they just recently put out a paper on, you know, don't let history repeat itself. How can we make this transition through what you know, so many people are committed to, that, you know, a vibrant planet of the future, but how can we do it at little displacement of individuals as we can on the way through? So I think that just to sort of round out, you know, if we go back to the beginning and say, we said this is about planning, people, and accountability, I think we have to be thinking not just about within our own organization, but how can we use our voice to be thinking about workforce of the future outside of our organization as well.
Yeah, I think this concept of just transition is a really important one as well. But Lindsay, I wanted to give you a chance to comment on that, because as we said in the beginning, this is, you know, it's going to be a long journey. And so you have to keep people engaged. You have to keep convincing them that you are making progress and that, you know, the big goals that you set are going to get achieved. But how are you thinking about that at RBC and keeping people engaged and using it, again, to the earlier question around how can it be a competitive differentiator in attracting and retaining talent?
Yeah, so I think there's no question there is a ton of engagement on this topic. And more than ever, I think what the pandemic has done has shone a light that we really want to work with purpose, that it's important to us to find meaning in our work. And part of that is making sure that you're aligning with an organization that you believe shares the values that you do. And so I would say, you know, keeping people engaged is probably not the issue that we have, Jennifer. It's, you know, just trying to mobilize people as fast as we need to, bring in people, train people, embed ESG into every business strategy, every client interaction, and do so with some frame of consistency, I think, to ensure that we're also holding ourselves up to that standard, because there are best practices that are associated with ESG. And one of the probably the biggest risks is greenwashing, or doing something, whether intentional or unintentional by nature, which could undermine that. So there's no question, though, our clients are increasingly looking to us. We're being evaluated on our own ESG scores, both from our corporate clients who want to partner with a bank that is on a similar path to them, that perhaps has already advanced some of their own strategy and their learnings they can bring into those insights. Our institutional clients who are increasingly making investment decisions on ESG scores are equally selecting their banking partners. So we do a tremendous amount of bespoke surveys for our clients on what we're doing on diversity and inclusion, on climate change. And so I think there's a lot of information asymmetry out there. There's a lot of data, but we don't have standards yet. And with that, sort of, if the fund manager and me or the active manager say that there's opportunity in that, an opportunity for differentiation, and that's where the alpha is. So I think there's it's a tremendous competitive differentiator for talent. That's where they want to work. It's a competitive differentiator for your clients, because they are increasingly using these factors to evaluate their business partners and their own supply chain. And it can be a competitive differentiator for management too, in terms of how you're future-proofing your business.
Yeah, I couldn't agree more. We've got time for one last question, and Sara, maybe I'll leave this one with you, because I think you touched upon this concept earlier. But one of our participants is asking, what are your thoughts on micro-credentials, you know, as opposed to getting that full degree? What, you know, how will that play into filling some of the talent gaps in sustainable finance?
That is an interesting one and a challenging one, because you're going to need to see, you know, which areas you're at. You're going to need to understand the big picture, no question about it, right? You need to understand the full commitments, where we're going, the global trends, and then come down to Canada. As both Norie and Lindsay mentioned, we had to come up with our own solution, right? We're a resource-based economy, and we had to come up with our own frameworks and our solution. But when you look at your designations, or what you're looking at, and specializing, I think that goes with the stage in your career. maybe if you're starting up and you're a risk management analyst, then maybe you're going to focus on that specifically. And as you grow, you're going to be expanding your horizons, right? And start looking at, more of the softer skills or more of the strategic skills and looking into the future. But it depends on where you are in terms of that career path, I think, and so will the training, right? And also, back to the points that both my co-panelists made, we have also a generational challenge or factor to look at, in that for most of us in the industry, we have been around for quite a while. It is a matter of retraining, but for the new ones coming in, there's a lot of reverse mentoring. My son is in biodiversity and conservation, and I hear a lot about, these things and the biodiversity coming into the funding. And so there's a lot of, the generational differences, right? But as they come into the workforce, I would say more specialized into the areas that they're looking at. And then as they grow, they start to be looking at the more strategic, kind of like looking forward, where do you want to go?
Thanks, Sarah. Well, unfortunately, we're out of time. I think we could have had a longer session on this particular topic, but certainly we at TFI hope to reconvene around this topic again. I think it's a very important one. I think we've gotten some fantastic perspectives from our panelists today. So thank you so much for joining us and taking the time to chat with us and with the audience. It's been a great conversation and a very important one to be having. And we will, as I said, we'll try to reconvene another session on this topic. So thank you to everyone, and thank you to our participants for being with us today. We look forward to hosting you again. Thanks, everyone.
Thank you.
Bye-bye.